But all of this helping support the markets, whether here or as well as in Europe, with equities rebounding since their lowest level since 2016. Joining me now from London with more is Bloomberg's Dani Burger. Hey, Dani.
Hey, Alex, that's right. Another limit up reached in U.S. stocks. This is the 11th limit up or down in the past 10 days. Markets continue to get whipsawed, be it policy action or a boost from the Fed in this case. So European equities moving higher as well. The best performing sector in Europe is oil and gas. No surprise. Oil itself is moving higher today. And in a sign of maybe some of the easing stress, the dollar snapping that 10-day winning streak is the grab for cash over. Maybe not, but maybe this is just temporary relief after the Fed unloaded unprecedented measures to help support and help the financial system move at a well-oiled pace. Now, some market commentators say that's not the only reason that stocks are doing better today. After all, yesterday we saw U.S. equities fall after the Fed announced measure. One of the things that might be helping equities is the end of forced selling. This is something a lot of commentators have been looking out to end to help support markets. Basically, we've seen a whole lot of systematic selling, deepening the crisis we've seen in markets. On Credit Suisse's prime brokerage platform, when they divide up their clients by groups, they see that the quants, the systematic sellers, unleveraged by the fastest pace on record. So that no doubt contributed to some of the market turbulence we've seen. The good news is, though, if they are done selling, or even if they've just sold off a lot, it means that there's less selling that they can do from the point they currently stand at. This is something that JP Morgan thinks will happen. They say the forced selling is over. Now that volatility looks like it may have reached a peak, a lot of these sellers, when volatility ticks up, that's when they're prompted to sell. Now, taking their place, according to JP Morgan, is about $850 billion worth of cash that's on the sidelines that a lot of different investors are going to need to pile into stocks to help restore some of their allocation. So this is something like a 60-40 manager who's now light on equities and needs to meet that mandate. So we'll need to buy equities at this point.